For months now, I've been talking about how the global economy, the global financial system, is a global fiat currency, a debt-based fiat currency and credit Ponzi scheme, meaning that mathematically, all this debt, the total debt in society at all levels, at the different levels of government, at the corporate level, large companies, small and medium-sized businesses, at the family level, and at the individual level, the total amount of debt in society was too much that even if assets were sold, even if all cash flow was used to service debt, it could not be paid back. And yet Wall Street and other large banks are still selling even more debt. Wall Street is still selling massive amounts of corporate bonds, all different types of ratings, whether that's investment grade, which should not be rated investment grade, but the credit ratings agencies will not downgrade it for a bunch of different reasons. And then you have junk bonds, leveraged loans, collateralized loan obligations, and other toxic sausage. Meanwhile, you have all these governments which are creating currency units out of thin air to maintain the size of government, and they are buying enormous amounts of government bonds. And you're seeing Japanification and currency wars all over the globe. I've been covering this now for weeks. Well, earlier this week on a report out on Wednesday from the Institute of International Finance, or IIF, it came out that they are projecting an increase in total global debt to hit a record of $277 trillion by the end of this year, an enormous splurge thanks to the pandemic. Also because there's a lack of cash flow to service debt or pay down debt. And guess what? These governments are not cutting back, and Wall Street's still selling corporate bonds and helping sell government bonds as well. I've been covering those stories recently too. So the IIF, the Institute of International Finance, whose members include over 400 banks and financial institutions across the globe, said debt has ballooned already by $15 trillion this year to $272 trillion through September. Governments, mostly from developed markets, accounted for nearly half of the increase. This is also not counting a lot of the off-balance sheet items that the U.S. government is allowed to get away with because the U.S. government and the Pentagon do not adhere to generally accepted accounting principles. They use cash-based accrual accounting, and because they don't use GAAP, there's trillions per year in off-balance sheet spending that the U.S. federal government has gotten away with for many, many years. Developed markets' overall debt jumped to 432% of GDP in the third quarter from a ratio of about 380% at the end of 2019. Emerging market debt to GDP hit nearly 250% in the third quarter, with China reaching 335%. And for the year, the ratio is expected to reach about 365% of global GDP. Quote, there is significant uncertainty about how the global economy can deleverage in the future without significant adverse implications for economic activity. End of quote, the IIF said in its report. My analysis, there is no deleveraging. The politicians, the central planners, the central banksters, the large banks will not, when you have this much of an over-leveraged system, you have the over-the-counter derivatives market, which is much, much larger than this total debt number, $277 trillion. The over-the-counter derivatives market is even larger than this. I've seen 1.2 quadrillion for a gross notional size of the over-the-counter derivatives market. When you have these types of problems in society, you can't deleverage. They're just creating currency units out of thin air to delay problems or to the next system or system reset or debt jubilee or whatever the hell else. Who knows exactly what the next system is going to look like, although the governments are gaining so much power and it looks like we're headed down the path, unfortunately, of government cryptocurrencies and a cashless society and even more government control and less freedom. So there is no deleveraging. Now, maybe for the average person on Main Street, you're seeing this where people got their stimulus checks, they paid down debt. There was a spike in savings rate here in the United States with the stimulus checks that were sent out. People paid off credit card debt. I think there's a 12% savings rate, but that is small. Deflationists are calling this a savings glut. The Keynesians are calling this a savings glut. But that total number, that tiny little savings rate here in the US is still relatively small compared to the total debt in society. Again, look at the 277 trillion of all debt level throughout society, and that's not even counting a lot of the stuff. That's not counting the 400 trillion in pension fund shortfall globally. It's not counting the massive amounts of unfunded liabilities here in the United States. It's not counting all the off-balance sheet other spending that the US federal government gets away with because it's not forced to adhere to generally accepted accounting principles. So there is not going to be deleveraging right now for banks and hedge funds and big governments. Total U.S. debt is on track to hit 80 trillion in 2020, the IIF report said, up from 71 trillion in 2019. In the euro area, debt rose by 1.5 trillion to 53 trillion through September. The European Central Bank's balance sheet is up to 40% of GDP. Pretty freaking crazy. What a mess. Japanification, stagflate tax lie, currency wars, creating currency units out of thin air to maintain the size of government, buy up government debt, to of course fight deflation. And then you have situations where in the United Kingdom, which their government doesn't have a lot of extra reserves and savings, and they're maintaining 80% of workers' wages through at least the next couple months, and they've been doing this for a while. Where do you think that currency is coming from? That money is being created, that currency, it's not really money, that currency is being created out of thin air with MMT. They're just creating currency units out of thin air to hand out checks or to buy government debt, to prop up asset prices, to give people salaries, to fight deflation. There will be long-term ramifications for this, long-term consequences that a lot of the deflationists are not thinking about. A lot of unintended consequences and distortions. And there's a lot of debt, and it's not all just in dollar-denominated debt. So there's an enormous spike in Chinese yuan-denominated debt, euro-denominated debt. So there's about 4 or 5 main currencies that all the debt is in. So a lot of it is in dollar-denominated debt, but the big spike the last 10 or 12 years has been in Chinese yuan-denominated debt. There's an enormous amount of debt at all levels of the Chinese economy now, and there's also a lot of euro-denominated debt. Among developing economies, Lebanon, China, Malaysia, and Turkey have seen the biggest increases in non-financial sector debt ratios so far this year. Emerging market governments' declining revenues have made paying down debt much more onerous, even amid record low borrowing costs across the globe. Through the end of next year, and this is very, very worrisome, some $7 trillion of emerging market bonds and syndicated loans will come due, about 15% of which is denominated in US dollars, said the IIF. 15% of that $7 trillion is going to be in dollar-denominated debt. So I wonder if the Fed's going to have to extend currency swap lines. Because cash flow is either cash flow pays off the debt or services the debt, or the Fed has to extend currency swap lines, or there's the global repo facility. Officials from the Group of 20 last month agreed to extend the debt service suspension initiative, freeze unofficial bilateral debt payments to the first half of 2021, and said they would consider another 6-month extension in April. The global economy is forecast to shrink 4.4% this year and expand, I don't believe that, 5.2% in 2021, according to estimates from the International Monetary Fund. And the IMF is talking about a new system, a system reset. Debt is at dangerous levels as pandemic-induced lockdowns and travel restrictions weigh in on economic output. So this Ponzi scheme is growing faster and faster and faster. Total debt. The solution to a debt problem is not more debt, and yet that is exactly what is happening. And historically, governments normally deal with debt problems. The majority of governments deal with debt problems not by admitting that they can't pay back the debt and actually restructuring the debt. They normally create currency units and devalue the debt that way. And that is what we have now. We have lots of that. We have currency wars right now. We have all these governments, all these central banks. They're all creating hundreds of billions or trillions in currency units out of thin air to buy back government bonds, maintain the size of government, so politicians, unelected bureaucrats can create lockdowns, shut down our businesses, destroy the real economy. Meanwhile, the size of government stays the same or grows, and government gains even more power. And of course, it's to fight deflation and to protect us, because deflation is evil. Deflation is bad. Or at least that's what Keynesian economists and deflationists tell us. Meanwhile, the average person actually benefits from deflation, especially if you have no debt. So we're at 200, or right around 270 trillion now. We've grown enormously since the end of last year. And that's not even counting all the numbers. So this is a Ponzi scheme because mathematically we can't pay back all this debt, and yet Wall Street is selling even more debt, and the debt is growing faster and faster. It's still growing. That's the crazy thing. And I outlined for patrons how the U.S. Treasury is going to have to roll over even more debt in the not too distant future. So the U.S. Treasury is a short-term subprime borrower. There is an enormous amount of that 27 trillion plus in total outstanding national debt, the U.S. Treasury debt, that has to be rolled over in the next 12 months. It's between 8 trillion and 10 trillion. And I outlined how the Fed's balance sheet will be absorbing a lot of all this in the not too distant future for my patrons. If you want to take a look behind the paywall for only $5 a month, I don't think anyone charges as little as I do. It's also a lot of articles about gold stocks, royalty and streaming companies, oil, the oil industry, and other interesting things.